ladies and gentlemen, and welcome to the show on this Wednesday, April 19th, 2023. Thank you for tuning in. I'm glad to have you guys here. Now, here's the thing, guys. First, we're looking at the MOVE Index. We've seen a big shoot up during that banking crisis of Silicon Valley Bank, and now it's settled back down, but it's not quite as low as it used to be. At 122 today. You wonder what this is all about? MOVE Index. This is a measure of volatility within the credit markets. And by them opening up this window right here, see it went up to 200, they had to bring this volatility down. The Fed watches this MOVE Index very carefully. It's one of their metrics. Had to bring this MOVE Index down at that point when it hit 200 right here. It settled in at 198.71. And they did bring it down by this was the banking crisis. They needed to bring down the volatility, so they opened up the credit window. And $400 billion pumped into the system there. Now de-dollarization is well underway. And I heard about, I guess it was last year, I heard one of the people who are really into the market, they said, yes, the dollar's going to disappear as a world reserve currency. They said it. They said, but it's going to take 30 years probably. Just like I get my dates off quite often, I'm often correct on what I forecast. It's just that my dates are off. I think their dates are off. I don't think it's going to take 30 years. Not even close. It looks like the pace this thing is on. It says right here that de-dollarization is happening at a stunning pace. And this is before they've really dumped all their treasuries yet and stuff. This is, I think, coming very soon. I think China still has like $1 trillion in U.S. treasuries. But what about all these other countries who, because the dollar had this exorbitant privilege of being a world reserve currency, a lot of countries have held U.S. Treasury bonds, and they still continue to hold them in a smaller way. The two biggest ones that hold them are China and Japan. A lot of dollars could start coming home really fast now. And so we see it says the dollar is losing its reserve status at a faster pace than generally accepted. As many analysts have failed to account for last year's wild exchange rate moves, according to Stephen Jen. It says the greenback share in the global reserve slid last year at 10 times the average speed of the past 2 decades. So that's the data's in for last year. What's the data going to be for this year? If it's 10 times faster, the speed that it was losing last year. This year might be 100 times faster than the average pace. Everything's moving quicker now. In the United Kingdom, right now, their inflation is coming in red hot. And it's in the double digits, their inflation level. And so this almost ensures that the BOE, Bank of England, is probably going to have to raise rates. Well, they don't have to. I think it's all a mistake, raising rates to try to fight inflation. But this is the central bank's motto right now. And as far as our Fed's concerned, we're probably looking at another rate hike. I'm thinking 25 basis points very soon. Now that they've brought things like the MOVE Index under control. The Nimitz is a carrier strike group. It's called the 7th Fleet. It's the biggest, most powerful navy military on the ocean in the world. The 7th Fleet. It's massively powerful. Where it goes is where the trouble is the highest. That's where it's going, in the Pacific right now. And you know that what happened was China built these islands in the area of the Spratly Island chain from nothing. Basically out there in the middle of the Pacific, in the South China Sea, there was areas where there was what's called shoals. And this is big lumps of sand underneath the ocean that are not real deep. Ships going through that area would have to be careful because they would bottom out on these shoals. So what the Chinese do is they went into these shoals and they use what's called dredging machines, where a pump pumps that sand up and pumps it and makes land from nothing. So they made islands where there weren't islands before. Well, under maritime law, these islands were not recognized because they weren't on any of the maps, because the Chinese just created them from nothing in the South China Sea and around the Spratly Island chain. And so this was taken to court of The Hague, and they made a decision on this, that area comes under the freedom of navigation. That was the decision. So that any country has freedom of navigation, and the United States has a right to be in there and sail anywhere in there they want. But China says, no. We don't abide by any of this. This South China Sea's ours. And so right now, the Nimitz Carrier Strike Group in this hotly contested area, they're moving into this hotly contested area in the South China Sea. It says Nimitz Carrier Strike Group is back in the South China Sea. The Chinese carrier is still on Pacific control. And there's a picture of the Chinese carrier. Now, how I can tell it's a Chinese carrier is, you see on the bow here, this got this little swoop that goes up? Chinese carrier has that. Now, the Nimitz and our carriers over here, they're just flat deck. But they got that little swoop up because the plane gathers speed, and then that little ramp gives it a little push on the Chinese carriers to get the planes airborne. And that's the difference. You get that little swoop up on the front of the Chinese carrier. It says the Nimitz Carrier Strike Group in the South China Sea and the Makin Island Amphibious Ready Group is operating in the Sulu Sea, according to the USNI News Fleet Marine Tracker. Meanwhile, the People's Liberation Army, Navy, Shandong Carrier Strike Group continues its training patrol in the Pacific. So we've got two massive militaries in the South China Sea right now, and they're both interacting in very, very close proximity. What could go wrong? Just saying, okay? Moving on, taking a look at the markets today, taking a look at silver specifically. Silver started a little bit of an upswing just in the last few minutes. It's at 25.12 right now. So what we're looking at is silver's been in quite a tight trading range here the last couple of days. This shows the last 3 days. And because it's in a tight range between 24.80 and 25.40, basically, and it's right in the middle of that range right now at 25.12. Taking a look at gold today. There's my gold chart. I just clicked it. Come on, computer. You can do it. Okay, gold is down $21.10 at 1984 today. Things are starting to turn a little bit bearish right now. One of the things that's causing it is statements made by one of the members of the Fed, you know, and there's very hawkish statements, and they're going to be hawkish, the Fed is. And I think the markets are starting to realize this a little bit. And we haven't broke through this deflationary event we're in. I call it a deflationary spike event. We're right in the middle of it right now. We got to break through this to the other side. And I'm going to tell you, there's only one thing that's going to break us through to the other side. We have to have something happen within the financial system that scares the pants off of the Federal Reserve and the Treasury. So what you have here is you have the lender of last resort and the borrower of last resort. And between the two of them, they can create a mechanism, a machine, that blows money all over the place. But that machine's turned off right now. And they're only going to turn it back on when there's a dire crisis. That's when the two are going to start to work together again to create the money creating machine. But right now it's turned off. And because it's turned off, all of the economy right now is being drained of money. Because the machine's turned off. It's been on for years. It's been running away in the background. And dollars have been spitting out of it for years now. But now they've turned it off. And the money's disappearing from the system faster than you can imagine. What we call money is actually Federal Reserve notes. And so everything's priced in dollars going to start to go right down, the downward spiral. You know? And so in order to get this machine turned back on, we need a massive crisis. And that massive crisis is coming. And on the other side of this crisis, the machine will be back on again. And then what will happen is then the final demise of the dollar will begin. And so don't save in dollars. Even though we're on the side of this right now, where the machine's turned off, and it really looks very attractive to hoard dollars right now. But do you know how quick they can turn that machine on, how quick a crisis can happen? You remember Silicon Valley Bank, how it went down, and how long did it take them to have those emergency meetings and come out on the other side of that and say, okay, problem fixed. Done. Problem fixed. They can do the same thing again, just as fast. And the dollar can just go down. This time, when they start the big print again, to try to get out of this, like they did the big print of COVID. Remember what it did to the markets? I'll take a look here real quick. Oh, I didn't say the price of Bitcoin. It's 29,304 today and 1982 for Ethereum. Take a look at the markets here. Now, go back. Let's see. Let me see if I can get this to the beginning of COVID. I think it was right. The beginning of COVID was right there. Well, that right there is a big drop of COVID. That's the COVID drop. Let's call it the COVID drop. And we dropped from we dropped from roughly more or less about 30,000 the Dow before COVID, and all of a sudden it dropped. This drop right here took us down to like I think it was under 20,000. Behind my head here. Just a sec, guys. Try to see where was the bottom of here. Hard to get it. Anyway, it was a notorious drop in the market. Right there. Okay, that was a COVID drop. And then they came to the rescue. And the people that bought in at the bottom of that COVID drop, look all the way up to 36,000. All right? You all remember that. Well, now we dropped off, and what we're doing is we're just kind of slogging along here. I'm expecting another big drop in the markets caused by perhaps commercial real estate, perhaps more banks going down because they're still raising rates, etc. It's going to trigger. War could trigger it. We're in a period right now where there's so much malinvestment that we could get a slide that's just as powerful, if not more powerful, than what happened here during the COVID thing. And the banks are stuttering on the end. What if the market collapses? How's that going to affect the banking system and stuff? You know, I mean, how's it going to affect everybody if the market were to take another big dip like that? Say down to, I'm figuring down 26,000. That's what I've been telling you guys. A dip down to here. Okay? They're going to come in and they're just going to do what they have to do to save the system. And then you'll get the Treasury and the Janet Yellen and you'll get the Federal Reserve all working together then. And that's what'll get them working together. Money printers start up again. Then we start this big boom just like we did last time. I'm expecting the whole thing all over again. But this time 40,000 Dow. You know, but does that mean their dollar's worth more? No, what good is 40,000 Dow if your dollar is only worth 50 cents of what it can buy right now? It's like, so what? I mean, you'd be just as good to spend the money in the market now, but you get more purchasing power than you would if the dollar loses 75% of its value and the market goes up to 40,000. If that's making any sense. I mean, okay, crude oil today, it's down $1.36 on the day so far. Whenever I see crude oil go down, that is a canary in the coal mine. There's two things. A couple things that I look at as a canary in the coal mine for a negative liquidity system. A system that's starting to dry up the liquidity and gives off signals. First thing is money starts to move around within the system rather quickly. We've already saw that signal happening. Another signal is the price of copper, and the price of crude oil. Those two commodities are signal commodities in my mind, and you see the price of crude start to drop. It says, okay, the economy is looking forward. They're front running a recession because there's less oil consumption in a recession, so and the same thing with copper. Copper is like, okay, it looks forward and it says, hey, you know what? Copper prices are dropping because there's not going to be as much construction, not as much use for copper and electrical and everything else. It's kind of like forward-looking indicators, those two. Bonds right today, we're looking at rising yields on bonds today. The U.S. 10-year is at 3.61 and it's up 3.8 basis points. And the U.S. 30-year is at 3.8 and it's up... It's up 1.6 basis points, yeah. So we're seeing all the long end rising today, and the short end can't make up its mind. It's the 4 months just came in unchanged at 5.21. Still a massive inversion in bond yields. If you just take a look at this, you're going to get 5.2 on a 4 month, and you're only going to get 3.8 on a 30-year. So this is called an inversion. And we've had this for so long now that it's becoming just the accepted norm. But normally this is an indicator of a recession coming in. Okay, finishing off with the dollar index at 101.86. And which way is it going today? It's going sideways today. It went up earlier and now it's going back down again. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Have a great afternoon. Bye-bye.